U.S. and other nations are exploring options to cut off Russia's oil supply, with American officials reportedly now in talks with Venezuela to bring more of its crude to market. Data shows Russian crude accounted for just 3% of our oil imports last year, but at 209,000 barrels a day, that was actually the highest figure in at least 20 years. For more, let's bring in Paul Sankey. He's lead analyst at Sankey Research. And Paul, we are seemingly trying to, turn to Venezuela and Iran, and now some are saying Biden's trying to sort of patch up his relationship with the Saudis. How much of this is going to be international diplomacy, and how much can the U.S. do to make a meaningful difference here?
Well, God forbid he would approach the Canadians, right? I mean, it's insane. It really is incredible to think that this is what we've come to, after the administration came in and canceled the Keystone XL pipeline. But there it is. In terms of where we go from here, yeah, it's just about the planning assumption of the oil companies and whether or not they're prepared to go from, around 60. They plan on around 60 right now. Are they prepared to buy into the idea that this crisis is going to be sustained for more than months? And that's a very tough question, obviously, at this stage, after we've only really, seems like 2 years, but it's only been a week, right?
Quick question on Keystone. Would that actually have, so we said 200,000 barrels a day of Russian oil. Would Keystone have given us that equivalent? How significant would that pipeline have been to the U.S. oil trade? And is it true, I've seen some reports that Canadian crude is actually selling at a bit of a discount right now because it can't be moved? Or are people making too much or too little of the pipeline issue?
Well, I think Keystone was more of a signal from the Biden administration insofar as it had originally been delayed by the Obama administration in 2015. So, and then, of course, Trump, brought it back. So it was already kind of a mess. And that's the problem, is that, what we need is a steady, stable environment that allows these safer, better ways of transporting hydrocarbons to be developed, which obviously is, a pipeline system that's functional, as opposed to using trains or having to get in, as in the case of New England, gas from Qatar. So ultimately, it kind of would have made a difference, but it's very difficult to start saying, when you start counting. At times, Canadian crude is traded at huge discounts. At the moment, it's trading very, very well, obviously, because the market's so tight. And, there's obviously such an enormous problem globally.
Where do you think those barrels are going to... So there's a couple of options here. Either we do lose the Russian barrels and we have to fill that gap. If we cannot, then we'd have to rely on the price to go to whatever it is going to be, $200 a barrel to destroy demand. Or maybe we don't go that route. I mean, how likely is it, do you think, at this point, that we end up blockading Russian crude imports?
Well, listen, Kelly, we already lost the barrels pretty much, right? I mean, obviously, there's a flow through. So as I was saying on CNBC last night, as Tokyo opened, you've got to remember that oil through pipelines travels at walking pace, and tankers do about 25 miles an hour, 20 nautical knots. Everything moves slowly, but it's a constant chain. So as you lose supply, it takes a long time to feed through. And that's what we're facing at the moment. But what was really stunning, as you know, is that the sanctions were quite explicitly not to interrupt energy flows, and they haven't for natural gas. But the world oil industry basically just dropped Russian oil like a bad habit.
Yeah.
And for example, I confirmed last week with Valero that they're not buying any Russian crude and haven't been. And you've seen one cargo that Shell said it had bought became a public relations disaster for Shell. So although it's taking time to feed through, and the sanctions, is, more Russian sanctions on oil specifically from the U.S. has panicked the market, the reality is it's already done. We're not buying Russian oil.
Great point. Let me ask you a final crucial question. As an investor, what do you want these companies to do? Do you want them to stick with the discipline that they have promised, even at the expense of political blowback? Would you like to see them, for almost patriotic reasons, do as much as they can to pump and, do CapEx now to meet this objective? I'm just curious, what's that cost benefit for you?
Yeah, I find it curious the way people treat the oil industry. It's like at the lows, they have zero friends. And suddenly it's like, why aren't you pumping more at the highs? And, it's not as simple as that. It's, as we've said, very difficult just to add the barrels anyway. There's no people in Midland, Texas available, certainly not any engineers. And if you were to say to them, pump more, they would probably just go and outcompete the next door rig to buy the guys from the next door rig, because there's just simply no one available. It's not like we have spare capacity here and we're deliberately not producing it. No, what we want is for them to be very disciplined in their CapEx. And if there is really clear proof that we're going to sustain a much higher level of oil prices, which obviously seems to be the case, then we can start thinking about investing at a higher level. And the government should, facilitate the development of pipelines and a stable regulatory environment, which they frankly just haven't done.